Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Thursday, June 19th. In this episode, we go over highlights of the Fed meeting yesterday, then Mark Zuckerberg's 9-figure offers to poach AI engineers from OpenAI, and finally, TikTok is sticking around for a little longer. Chairman Jerome Powell says that the impact of tariffs is coming.
I think we have to learn a little more about tariffs. I don't know what the right way for us to react will be.
Yesterday, the Fed kept the rates between 4.25 and 4.5%, while the new dot plot lead to further stagflation. All through the supply chain, people will be trying not to be the ones who pick up the cost. But ultimately, the cost of the tariff has to be paid, and some of it will fall on the end consumer. If you look at what's happening here since March, you see a little slower growth. There's a 1/10 pickup in unemployment, and you see inflation is moving up 3/10. The TLDR of yesterday's Fed meeting is we still expect 225 basis point rate cuts for the rest of the year to a median rate of 3.9%. That's unchanged from the March projections. On the labor market, the Fed now sees a 4.5% unemployment rate for the year. That's up from the 4.4% earlier estimate. Mark Zuckerberg is trying to build an AI dream team, and he's apparently offering OpenAI employees $100 million signing bonuses to jump ship and join his company. This information is coming directly from Sam Altman, the CEO of OpenAI. He talked about this on the Uncapped podcast.
$100 million signing bonuses, more than that comp per year.
This is crazy.
And it is crazy. I'm really happy that at least so far, none of our best people have decided to take them up on that.
See, Zuck has recently been obsessed with building an AI superintelligence team. Meta already poached the CEO of Scale AI after an investing round of $14 billion into that company. They also pulled a top researcher from Google's DeepMind. President Trump is officially extending the TikTok ban deadline, his third time doing so. Most people expected this was going to happen. Remember that there's currently a law in the US that requires TikTok to divest from its Chinese parent company ByteDance for national security reasons. The law was passed by Congress last year and it was signed by Biden. Now, obviously TikTok sued against this ban, but this ban was upheld by the Supreme Court back in January. So the law is in effect, but Trump has delayed the enforcement of this law and he keeps kicking the can down the road and giving TikTok more time to comply with the law.
With TikTok, I was #1 on TikTok in its history. Can you believe that? So I guess I like TikTok. That's why they're saying, are you saving? And we probably will save TikTok.
He first granted TikTok a 90-day extension on his first day of office back in January. And during those first 90 days, there were rumors of a huge potential sale between Amazon and Oracle. Rumors say that that deal fell apart in the last minute. Nothing official has been signed, so he extended the deadline again. Since then, the talks have basically fallen apart because of the rising trade tensions between China and the US. Today, Trump extended the deadline another 90 days to September 18th. That's all the business headlines I have for you today. Now, let's take a look at some stocks making moves. Circle stock keeps pumping as the company behind the stablecoin USDC got a huge boost after the Senate passed the Genius Bill. This new law sets a regulatory framework for stablecoins, allowing companies, banks, and institutions to issue their own stablecoin. Actually, Walmart and Amazon both announced that they are working on their own version of a stablecoin. So this is pretty bullish news for Circle, and the stock is up more than 7% this morning. And shares are up more than 400% since they IPO'd less than 2 weeks ago. Let's wrap up the show with a fun fact. Chase is increasing the annual fee on their popular Chase Sapphire Reserve credit card from the annual $550 to $795 a year. That's a 45% increase. You know, back when the card actually launched back in 2016, the annual fee was $450. And the sign-up bonuses and the perks were so good that it was a no-brainer to get the card. But now that a lot of people have this credit card, Chase is ready to squeeze more out of them. Now, the company says they're going to offer more perks like a $500 hotel credit, and $300 dining credit, and even an Apple TV Plus subscription. Overall, they said that for the $795 annual fee, customers will get credits up to $2,300. I gotta meet somebody who's actually using this $2,300 worth of credit. We'll see if people actually end up holding on to this card, but they might not have a choice because there's rumors that American Express is also planning to raise the annual fee on their platinum cards to $1,000 later this year. So the high-end credit card game is starting to get more expensive. But hey, at least airport lounges might get less crowded now. That's all for today's show. Keep navigating those waters, and we'll see you tomorrow.